There's only a handful of trillion-dollar companies outside of the west coast of the US, and TSMC is one of them. TSMC makes chips for Apple, Nvidia, AMD, Qualcomm, and yes, your iPhone and ChatGPT are also powered by TSMC in the back end. The market position is extremely competitive. They own about 60% of the market for global semiconductor manufacturing, which is called the foundry market. About 90% of the advanced chip manufacturing, which is chip manufacturing at the 5 nanometer and the 3 nanometer nodes. They have a footprint, a very large footprint in Hsinchu in Taiwan, and they have an expanding footprint in US and Arizona, and also in Germany and Japan. Without TSMC, it's safe to say that there will be no AI boom. The AI hedge that no one really talks about. Everyone's guessing as to who will win the game, the AI game. Will it be Nvidia? Will it be Amazon? Google? But again, all of them come to depend on TSMC. The valuation, let's look at the valuation metrics now. Are you overpaying for them? The revenue for the company grew from $20 billion to $88 billion over the last 10 years. The return on equity for the company is excellent at about 27%. The margins for the company are also very strong at close to about 40%. Dividend yield is at 1.1%. The valuation multiples are slightly on the higher side. Price to earnings is 30 because of the value and the innovation that they've been driving. Price to free cash flow is about 47. They've had the free cash flow has been impacted because the capital expenditures have been enormous, especially in the wake of the AI revolution. Is it fairly priced? I would argue yes. Is it cheap? Absolutely not. What's a big moat for TSMC? The moat for TSMC is that it really has no competition. It's playing in a very rarefied space, and it's working at the bleeding edge of technology, so it's very difficult to replicate the technology. So the moat is a combination of engineering, the trust that it has with its customers, it never competes with its customers, the high yields that they're able to deliver, and the scale that possibly Samsung or other companies do not have at this point in time. The biggest risk obviously is the geopolitical risk. Now again, this is a golden goose, and China is going to be very careful about potentially annexing Taiwan and losing TSMC. That's a situation that I don't think will happen, and I think there are rational actors on all sides, and TSMC will prevail just because the entire global supply chain for semiconductors and electronics flows through Taiwan. In that sense, it does have a silicon shield, so to say. How should we think through valuation of the company? The HPC, which is the high performance computing segment for the company, is growing at about 60% annually. It contributes about 53% of the total revenue for the company. So let's assume that HPC grows only at about 30% going forward. Let's be a little conservative, let's sandbag here, and let's assume that the rest of the company is flat, which is 0% year-over-year growth. The weighted average growth over the next 5 years, even factoring all of these variables, is about 21%. So what it means is that the revenue, which is currently at around $90 billion, will double in less than 3.5 years. So at 35% net margin, the earnings for the company will be close to, in a 5-year time period, will about 35% multiplied by $212 billion of revenue is about $75 billion. So the valuation of the company, assuming a 25% very reasonable valuation, much lower P multiple than it's currently trading, is close to about $1.8 trillion. Now, the current valuation for the company is about $1.5 trillion, so there is certainly some headroom for us to grow. The reason why I'm sandbagging at every stage is for all of us to know as value investors that we should understand that this AI spending frenzy will come to an end sometime or the other. These capital expenditures with the large companies of about $100 billion every year is, or maybe even bigger in many cases, is not sustainable. And again, we need to have earnings growth which need to be commensurate with this capital expenditure in the next 3 to 5 years. So assuming that there's going to be a role of gravity to play in earnings and in total capital expenditures, TSMC will certainly be impacted, and that's the reason why we shouldn't be factoring in a 45 or a 50 or a 55% growth rate in that high performance computing segment. We should assume something that is lower. In summary, my assessment is that if AI is the new electricity, TSMC is the power grid. This is certainly not financial advice in any way. You should be speaking to your financial advisor or to trusted consultants who advise you in your portfolio. But I certainly think that TSMC is an interesting investment proposition and certainly worth digging into deeper. Thank you. Have a nice one.